First-time home buyer tax credit presentation by Jamie Skaka. First-time home buyer tax credit for up to $8,000 is extended through June 30th, 2010. All contracts need to be in by April 30th, 2010 and close no later than June 30th, 2010. Incentive for homeowners to sell and buy a new home. A tax credit of up to $6,500 for qualified purchasers who have owned and occupied a primary residence for a period of 5 consecutive years during the last 8 years. Joint tax filers earning up to $225,000 are eligible for the total credit amount. Partial credit if you earn more, and over $245,000 in earnings, you are ineligible. Single tax filers who earn up to $125,000 are eligible for the total credit amount. Those who earn more can receive a partial credit. Over $145,000 in earnings, you are not eligible. Sales price. Qualified buyers can purchase a property with a maximum sales price of $800,000. What is a tax credit? A direct reduction in your tax liability owed by an individual to IRS. If no taxes are owed, the IRS will issue a check for the amount of tax credit the individual is owed. Repayment of the tax credit. Not required to repay unless the home at any time in the first 36 months of ownership is no longer the individual's primary residence. Tax credit an eligible home buyer may request up to $8,000 or 10% of the purchase price. If the home is purchased for $75,000, the credit can be $7,500. If the home is purchased for $100,000, the amount of the credit may not exceed $8,000. If you have not owned a primary residence in the past 36 months prior to closing and the transfer of a title, you're eligible. This applies to single and married couples. If either spouse owned a primary residence in the last 36 months, neither would qualify. If you owned property that is not a primary residence, such as a second home or investment property, that individual would be eligible. Claiming your credit. If you are taking the credit in 2009, you may choose to apply with your 2009 tax return, or you may apply for the credit sooner by filing an amended 2008 tax return with Form 5405. You cannot file in advance of purchasing a property. Purchasing with seller financing. A taxpayer can claim a credit if the property is purchased from a seller and seller financing and the seller retains the property with a land contract, contract for deed, etc. According to IRS, factors that would demonstrate the ownership would include right of possession, the right to obtain legal title upon full payment of the purchase price, the right to construct improvements, the risk of loss, the responsibility to insure the property, the duty to maintain the property, and then no tax credit would be given if you buy from a close relative, spouse, parent, grandparent, child, or grandchild. You do not use the home for a principal residency. You sell the home before the end of the year. You are a non-resident alien. Not eligible. You are or were eligible to claim the District of Columbia first-time home buyer. Doesn't apply for a home that was purchased in 2009. If your home financing comes from tax-exempt mortgage revenue, this does not apply for a home purchased in 2009. You owned a principal residence at any time during the 3 years prior to the date of purchase of your new home. You qualify if you can buy a home from a step relative. You qualify as long as they are not a direct blood relative. A parent who will not live in the property and co-signs for a mortgage for their child, and the child is a qualifying first-time home buyer, will be eligible. Well, I hope this has helped you to understand. Of course, the best path in any situation regarding taxes is to speak with a professional tax preparer or CPA. If at any time I may be of any assistance to you in purchasing a property in the Treasure Coast area, please feel free to call me. My name is Jamie Skaka, and I work with Prudential Florida Realty. My number is 772-342-6696. And thank you.